2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Old Selenoff.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
It's a good one.
On the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you ask about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could
All right,
follow
real
up,
quick, I want to throw it to Hogue.
to look through core goods inflation being driven by the
All right, I want to throw it to Hogue really quick. Hogue, we got
During
ES
the
trading
pandemic,
64.15 right now,
expectations proved more
64.15. Last
adaptive
trade
than
the
anyone
ES,
Yes.
low 02s, high
Driven by
29s, NASDAQ. Anything catching your eye for levels, upside or downside? We'll get back to the press conference. Hogue, you seen anything?
It's kind of hard to come up with anything, Andre, because the entire range for the session and the overnight and the regular trading hour session is still inside yesterday's regular trading hour range in the NASDAQ and in the S&Ps. I can't believe I'm actually saying that on an FOMC day, but we haven't moved.
Have not moved. All right, sounds good. Stay patient. Stay patient. Bonds are selling off. Yields are going up. We'll go back. Jerome Powell press conference live here on Top Step TV. Let's go.
Make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though. And that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that.
New lows.
And it wouldn't be good for,
new lows.
if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we
Dollars getting
take into
stronger. Rates are
consideration.
going higher. Dollars getting stronger. It takes less dollars to buy gold. 33, 36.
Hi, Victoria Guido with Politico.
Chart
When
is
it
up.
comes to the renovations of the Federal Reserve's headquarters that the administration has been
here we
looking
go.
into,
This is the
do
one.
you see their interest in that
Here's your hard
issue
hat.
as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So we This project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Hard hat. Full selling off.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed.
It's not a lot downside.
And
63.96
if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services
regular trading hour session low.
Goods inflation was well behaved before, and now goods inflation is going up.
63.96.
That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that.
Lows. Yes.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
Oh, good question.
How concerned am I that say that again?
The wait-and-see approach.
See Dolby here,
the
Dolby time. Welcome aboard. Powell press conference.
They're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, They may be less than
there's all this
people
man.
estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's a kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. We've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Here we go. Let's do a quick little line change. Again, we're watching Jerome Powell press conference. JD, Hogue.
Hi, Chair Powell.
Great stuff today. We keep selling off here. Let's get Dolby and
about what
myself
kind
in
of
here.
economic
Good
data
stuff. We'll
is
recap this
that
after
we
again.
need to
Jerome
see
Powell
before
press conference here live on
economy
Top Step
ready
TV.
to cut? I mean, do you need
See you guys
inflation
later. We are
back
selling off in the ES and
target?
NASDAQ. Dolby time. It's just you and
Are
me
there
for the
other
time
things
being. We'll
in
get
the
Mandy in
pricing
here
you look for?
once the press
Do you
conference
see weakening
wraps
in the job
up. But we got the
market?
Q&A
What
going right
things
here,
are you looking
right now. Top Step
I mean,
TV. Let's go.
ultimately,
Stay locked in.
It could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target, and the labor market was pretty good.
Yeah, what's that price going to be? We know what that price
was a
has to
time
be.
when policy was
strategic.
restrictive when we paused. And to be restrictive is to be supporting a return to our
Nasdaq
inflation
lows,
target.
23,424,
So as the two
now
targets
418.
get back
Oh,
into
look out
balance,
below. Look out
you
below.
would-
Nasdaq
you
is
would
getting
think you'd
in
in a way.
right now.
closer
400's
to
print.
neutral.
400's
And
23,000.
The next steps that we take are
Maybe
likely to be
around
in that direction.
somewhere between
What
like
will it take?
200 and
It'll just take-
250,
it'll be the
might be close to
totality
a
of the
percent.
evidence. As I mentioned, there's quite a lot of data
200,
coming
250.
in
Okay, thank you.
before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like will
Wow. More selling, yes.
some
Or more
people would
selling
point to
NASDAQ.
if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time
Down
thing.
below.
Is that kind of thing affect your thinking, or do you just need to see the number come down
I think
closer to 2?
We'll look
This
at
up.
everything.
Let's take down 200 points. 200 points
As
in
I
the
mentioned,
last
a pretty reasonable base
20
case
minutes.
is
New lows.
that
Bonds
this will
selling
be a
off,
one-time
rates
price
going
increase.
higher.
And in the end, we'll make sure that
That
that's the
1%
case.
is about
We're just trying to
219,
do that
Dre.
efficiently.
218,
219.
219.
Efficiently means getting the
We got
timing
ways.
right, so
Yeah,
we
ways
don't.
to go.
Again, if
We got a
go-
ways, but
if we cut rates too
NASDAQ,
soon,
you never know.
maybe we didn't finish the job with
don't.
inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and
Trying to thread the
that's
needle.
effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank
So
you.
this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I wouldn't say it doesn't come up if the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy?
Is the president going to say something?
We're monitoring the situation. We do, of course, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But at the same, we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if we have to make do with what we have, but I certainly hope that we get what we need.
That was a good one. Bounce back, about 60-point bounce in the NASDAQ. Above 400, straight 23,418.
ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Smirk. Oh my goodness.
Maria Eloisa.
Read between the lines. What's up, Jerome Powell?
Yep.
Afternoon, Chair Powell. Maria Eloisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true. And it was, again, right in line with what we expected. The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting,
what is? I'm sorry, Dolby.
Affected by
EXY.
can affect consumer spending as well.
Oh, Dixie.
Look,
Okay.
It's one
Strong
of the
dollar.
data points that we pay most careful attention to.
Trading
And
99.87.
there's no question that it's slowed.
7.
And, we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two
lows in
those are
the
our two variables.
NASDAQ. The NASDAQ. Again, we're watching Jerome Powell press conference Q&A going on right now.
What my colleagues were asking about this.
I have a top step TV, new lows, ES, new lows, NASDAQ. Stay tuned. We got Salt Lake City Sniper joining us after this. Stay locked in. We'll discuss
you said that the main number to look at is the
Let's go.
unemployment number overall. But what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But look, I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the
Bitcoin's
QCEW adjustment seriously, it may be even lower, maybe close to zero.
Trading 116.
But the unemployment rate
from 118 and still up like that.
was still low. So
Down
what that's telling you is
1.5% on the day.
that demand for workers is slowing, but so is the supply. So that's it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor forces is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits. Look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Still going.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So we have an economic go around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy was the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express, I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. But that's the story, and I would say well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, an unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock, and it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal, so that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff, Fox.
Getting there. Jerome Powell, press conference Q&A. Shouldn't be
Thank you,
too
Mr.
much
Chairman,
longer.
taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondered if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation because you're being pulled in two directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No.
Nice try.
A
for effort.
We're going to need to see the data.
Yep.
And it can go in many different
Also like
directions.
that one.
The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Still going. You're an hour power
Chair
hour.
Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
That should do it. Yep, I do. They're going to drop the mic on that one. All right, we'll get a little recap in here. Again, let's take a look at these prices. Oh, Powell having none of that. Here we go. Last trade in the ES. Yes, I was sold off for a majority of it. Not even 1%, though. Not even 1%. Take a look. Last trade, 63.85. Oh, here we go. Salt Lake City Sniper in the house. Mandy, how about that? Thank you for staying awake. While that riveting press conference, that Q&A. Thank you for staying with us. Hogue is back in here with his expertise. Hard hat on. I'll do this. Mine's over there. Mandy, welcome aboard. Thoughts? Have you taken any trades? Let's get right into it. How's it going, Andy?
Yeah, it's going good. No trades since the number has come out. Actually, I lied. I did a quick scalp. But sorry, since Powell has spoken, I have not taken any trades. I am looking for a possibility to run in long here in Power Hour. Just for some retracement. I feel like I've seen that before after he's spoke. It was as anticipated. So yeah, I'm intrigued to see what's going to happen. Just going to be looking for, a valid entry, following my rules. I'm up on my XFA.
Nice.
And so I just, I don't want to end up the day red. So if I do take it, it would be like a one lot, or sorry, not lot, but one mini contract. Maybe I might switch to micros, but usually I do minis though. So yeah, we'll see. We'll see if I like anything here. I did
That works.
draw some things, some trend lines here that I've just been seeing as we've been consolidating over the last couple days. So those would be kind of more valid support and resistance lines for me, which I have in gray. So yeah, that's about it for me right now.
Okay, Hogue, welcome back. All right, Dolby time. Mandy's looking for perhaps a long to the upside here. Hogue, I want to get a delta. You got a delta for me? We got some big numbers.
Yes, of
ES
course.
and NAT. What we got? Give me some big ones. Give me some big ones here.
ES negative 11,500. NASDAQ down 4,300. Congruent with direction. That was a pretty good wash, but you got to keep it in
45.
perspective, folks. The NASDAQ is down 0.15%. It seems like a big dump, but it's not.
Yep, Dolby.
Yeah.
I think we're going for 25 days. I think we're going for 25 days.
We
All right, we
care
got
about
42
30.
minutes left. Yeah, Mandy, by all means, if you do want to jump in here, take a trade, let us know. 63.77. Oh, do you want to do above below, Mandy? Or are you locked in right now? You can do above below.
I can do above
You're
and
like you're
below.
one.
I'm going to say 475. Nope, I
Question
like
mark?
450s.
450. This is the game.
450s.
We do above below. We asked Mandy. She is the best. We asked her what the price of the NASDAQ will be on the close. Put up a poll. Will it be above or below? Above or below? 23,450. Above below. I think Hogue, what was it? Dual mandate or data dependent? What was it?
It was dual mandate, I think, was the first one.
Oh,
It was, yeah.
very good. You go. Indeed. All right. Big selling off in gold. Hogue, any takeaways? Any takeaways from the presser?
Yeah.
Relatively. What do you got?
Well, for the first half of it, I kind of felt like the majority of the focus was on employment. And near the end, a lot of the talk was about employment. The labor market data shows solid market, but they do have downside risks. I thought that
I'm going
Powell.
short.
Oh, one short.
Good. All right, let's go.
I thought Powell.
No,
that's okay. I thought Powell had a lot of focus on employment. I think that seems to be one of his biggest concerns. Of course, tariffs are, but he did a lot of time asking questions about employment. So that firm employment, is more on the hawkish side. So I think that's why we kind of tanked a little bit the way we did, and we are currently recovering. Again, it was a manageable tank. It looked like it was nasty, but it wasn't that big.
No, it was not. It's specifically unemployment rate. So we're going to be getting that unemployment rate this Friday. We're getting all the jobs this Friday. Sometimes they took a peek. Mandy, you are in? Are you in and out?
In and out.
I'm out. I'm
Blink of an eye.
I just saw that we were going to maybe want to come and test a major trend line off my 15-minute. I'm sure it would probably hold as well. Looking for tests back down to 400s. We might do it here. I took it 2 contracts just because of how confident I was in the trade. I closed one down here at the bottom of the wick for another 150, and then I just set it break even because I just needed the momentum to run. If it wasn't running, I wanted to be out of it because I was worried it might reverse back up. So one contract was up 150, another one break even. So I'm a little happy with that quick scalp.
Nice.
But it still might go here to 400. Yeah, and with where we're at the market time, we have some numbers coming out. We just got off of the press conference, the rate decision. I need to be in and I need to be out because to me this is still can be volatile at any moment. So, and who knows, Trump might come on here any second and swing the market whichever way. So for that, I'm in and out and just securing very fast profits going into this last 39 minutes or so.
Well, I don't blame you. The dome is very thin.
It is. Hogue, I gotta say that hard hat fits you incredibly well. I don't know if you were like a contractor in your previous life, but you are rocking that hat.
Yeah.
1,000%.
I spent the morning moving bricks.
Look absolutely
Some
fantastic.
Top Step stickers on it.
Oh,
I
yeah.
know. I was looking
Stickers
for
on
one.
that bad boy.
I got some
Was
around
I?
here somewhere.
I was searching all over. I'm like, I've had a million of these throughout my life. Why can't I find one right now? Why can't I find one right now?
Dre, do you think Trump is going to latch on to that question from, I believe it was Jay O'Brien, saying that, I forgot what he was saying, but he had a cute little smirk on his face after that, thinking he got Powell. And I believe it was like, oh, if the Fed is doing a good job, or if they're not doing a good job, what is he going to do with the Fed? Kind of curious to see if Trump going to hop on that one and be like, well, you know what? He's not doing a good job. So why do we need the Fed at all?
Yeah, there needs to be some independence. He did a decent job. He's done a pretty decent job of keeping the market stable. And again, we're going to keep an eye out to see if the president, like Manny said, if the president does want to take to a microphone, he is scheduled to speak at the top of the hour. Before then, don't forget, we got Meta earnings, we got Microsoft earnings, we got Robinhood earnings at the buzzer. Go check that out.
There we go. I mean, it hit my trend line, and Q did at 405 really nicely. I mean, like I said, I could have held it. On a normal day, I would have probably held it a little longer, but today it's just in and out.
See money,
I'm
take
looking
money.
possibly for another retest. Yeah, exactly. I'm trying to see if we have any other
500
good
left.
downside targets for end of day.
I mean, 1% is on our radar. That is 23,220. Mandy, I don't know if you know this stat, but today could be the 25th day in a row that the NASDAQ has not moved plus or minus 1%.
Wow. I heard that stat earlier. That is very impressive. To go that
Shout
many
out to
days.
Dan
But
Emmons
earlier in
for
this
calling
year,
out that
we
one.
were swinging many percentages multiple days. And last year too. Election time, man, it's been wild. Yeah, I'm thinking the next target leg down would be here at 330s. We might want to push those. Even 300 flat. I mean, that would be quite a ways to go here in 30 minutes, but yeah, we'll see what happens. I'm no hands right now unless we start seeing a major flush. I don't feel like I would be catching a falling knife at that point, but we would have to hold or have a lot of momentum coming in below these 357s, whatever that low is. 356.
Gold continues to sell off now. 33.25. Ho got a $60 range in gold today. 50 on the till. Coming to the bottom of the hour in 5 minutes. Well, hey, copper went limit down. When the FOMC decision did hit the wire. Not only did that happen, James, we can bring this in if we're good to go. Congress is looking to advance the quote unquote Pelosi Act. What is the Pelosi Act?
Nice.
That headline is misleading. The headline is the committee has looked to push it forward for voting. Nothing has been passed. But Pelosi, the Pelosi Act, what is it you say? Stands for preventing elected leaders from owning securities and investments. Well done to the clerk that came out again. Pelosi, preventing elected leaders from owning securities and investments. It is, the Congressional Stock Trading Committee. They're looking to push this forward to a vote. We'll see. Again, it is legal. It is legal for Congress people to trade stocks. Yes.
I don't know if that is the right tweet from Polymarket. I don't know if it's Congress that passed it. According to the article,
nothing's been passed. Nothing's been passed.
It's a committee that's Homeland Security and
Correct.
Governmental Affairs Committee has advanced
Correct.
a bipartisan bill. And if you don't know how all this stuff works, I actually looked it up, and it's a total pain in the ass to get anything passed. So the committee approval first, then Senate floor action, then House consideration, then conference committee, then final vote, then presidential action. So there is a long way to go before this thing ever becomes law. But I don't know. I kind of agree with it. I think insider trading.
Dolby, hell yeah, man.
I mean, really, they get the insider trade. I think the people who might be most hurt by this are not only the politicians, but unusual whales. You know, all those apps that are tracking and selling the data to automate these trading systems to just buy what they buy and sell what they sell. It's on a delay, but the maths, and these are
Thank you, James.
profitable trades from these traders.
Yeah,
Traders.
Congress has not passed anything. Not passed
They have
anything.
not.
A committee is pushing it for further
Okay.
voting. A lot of it's procedural, but yeah, nothing
What are
has
the
passed.
odds that they're going to pass it?
Less than zero. You think they're going to do that to themselves? They'll do
Hell
term
no.
limits. They'll do term limits before they do this one.
Yeah, seriously.
True.
Must be nice. Must be nice.
They're not going to pass this, and then they're going to give themselves raises.
Yeah, but I'd rather have term limits.
Yep.
Yep. All right, let's
Me
take a look
too.
at these prices here. By the hour.
Nice little stair step lows here.
Yeah.
Let me get to that
We
magic
could push
1%.
a little. Still quite a ways to go, right? You said it was at 220s?
Yeah, I mean, I drew it from settlement. 23,220 is approximately going to be down 1%. We're only down a quarter
Point.
right now.
Yeah,
0.26, 0.25. So yeah, there's still a ways to go. I don't know. It's funny. How that is, you know, we've had a lot of volatility, but market really hasn't gone anywhere. Just slightly going up and to the right.
No. All right. Well, Paul has done it. Tomorrow we got some inflation numbers. Hogue, we got that Delta cooking here. Inflation. What a week, man. What a week. We got Mandy. If you're asking how we met Mandy, Mandy was a pit raider. VIP season 1, VIP season 3 draft. We were about halfway through. A little bit more than halfway through. Do you miss it? Do you wish you could go back, or it was good? You're an alumni now, and it's full steam ahead, Mandy.
It's full steam ahead. I am just have been so grateful for the opportunity to have been a pit raider and a VIP. I mean, it has really encouraged me to be a better trader. I've learned some awesome technical analysis
Yeah.
and risk management, and just the support in the community has been awesome. People, we're all in this together, as we've been saying for quite a while now.
To get you in trouble.
Yeah, and so it's just great. I love the Top Step community. And I'm just so excited for all those VIPs. You can kind of hone in a little bit more, get some insight from your coaches, and other VIPers in your group. And so, I mean, it's kind of a really not as stressful situation because of the free combine and resets and no activation fees. So, super
what a
stoked for
deal.
them. Excited to see how it goes for them. And yeah, life changing. I really hope a couple of them come out and, can come out and share their experiences of great success, kind of like how I've had. I'm so grateful for Top Step, the VIP program, Coach Hoop, everyone. It's been fantastic. So I'm a proud alumni. For
Amazing.
sure.
Yes, you are. 53% say above. How is marathon training going? How is it coming along? When is the big race? How many weeks till?
Thanks. Yeah. September 6th. I think we're like 5.5 weeks out. Big race this weekend. I'm currently not in my house. I'm at my sister's house right now, meeting my niece in Ohio. And I've taken an easy week after doing, what was that, on Sunday? 16 miles on the treadmill. It was literally the worst thing
easy?
in the world.
That's
It's
terrible.
easy?
Yeah, it was easy. It was so easy. Not like easy as in
For who?
I was running easy, took lots of stops.
Oh.
It was a hard workout. No, but I am
That's a
racing. The rest of the week
terrible
I'm taking
workout.
it easy. I'm racing this Saturday. I have a half marathon. It mimics a lot of the last half of my full marathon. So I'm hoping that this will be kind of a good indicator of how I'm going to be doing come September. I'm a little bit behind on my training schedule compared to last year and not as fit. So I'm intrigued to see if experience is going to help and mental capacity and all of that. So we'll see. Are we
Show
forming a Dorito here, Dolby?
Oh.
Yes, I would say so. At least on
Yeah.
the 3 minute, maybe 3 to 1 minute, we're getting
Minute.
definitely sort of a
Absolutely.
Dorito.
Let me
Higher
draw that for some
lows,
people.
lower highs, or maybe breaking
Hey.
out of it, depending on how generous you draw it. So maybe it's breaking
Yeah.
out right here, right now. But 400s maybe offered up a support. But yep, definitely a little Dorito. Powell's over. What's next? Probably just waiting for earnings,
Yep,
MOC.
exactly.
So maybe the
Ooh.
market goes back into a state of wait after we get that little bit of volatility that we just had, and maybe we're just going to chill town for the next 20 minutes. We'll see.
Hey, Hogue, take a look
Right.
at Fed funds. We are now at 52% probability of a pause for September. Coming into Powell at FOMC, we're around 62% probably of a
Yeah.
cut, 25 basis point cut. We are now
Oh.
basically 50-50.
50-50 for a pause.
50 for a pause. Interesting. Equities aren't going to like that, but they're handling it well. 70% long in the ES right now.
We should trade that. I mean, it's there's a lot of volatility there on
They're
Fed
cutting.
Day.
They're cutting. They're cutting in September.
Yeah.
They're cutting. I'm seeing it right now. Buy treasuries. Buy treasuries. Price goes up. Yields go down. All right. With that being said, hey, you know what time it is. We do it all around here. VIP drafts, earnings, news updates,
Yay.
and series 3 for ready to go. Let's do it.
Oh, let's do it.
Go.
All right. Did you hear the bell that time?
Did not.
Ding ding.
Lame. Ding ding.
Ding.
All right, here we go. This is a wordy one.
Oh boy.
In a carrying charge market, which of the following best describes the relationship between futures prices and spot prices over time? Is it A, futures prices are consistently below the spot price due to shortage costs? B, futures prices are above the spot price to reflect storage, insurance, and interest costs? C, futures prices converge upward to the spot price as the contract approaches expiration? Or D, futures prices remain equal to the spot price throughout the life of the contract?
Over to spot price as the contract. Oh, that is true. C is also not converge upward. It's B. Carry chart. Carry.
Carrying charge means further away is more expensive because you have
Correct.
to pay for storage.
Correct.
It's B,
Futures.
I think.
I got
the only
B
one
as
that
well.
the only one that I'm not sure about is insurance, because I think insurance may not be considered
it's
part
included.
of carrying charges.
Yeah.
But all of the other ones, it's not even, and price is usually above spot because of the carrying charges. So I think it has to be B.
As well.
I like that.
Right. Hoke says
He has
it.
a hard head on. I'm disagreeing with
Yeah, he
him.
does. He means business.
Okay, we ready for it?
Yes.
This could be embarrassing. There it is.
Yeah, let's go, Hogue.
Yeah, Carrie. The carry. Oh, ready for Power Hour in the chat. Got it right. Nice job. Oh, Darcy says it's B 100%. Darcy, you saw it after
100%.
the answer. We showed the answer, then you click B, Darcy. I'm on to you, Darcy. Come on to you. Hey, we still have 1,000 likes. Come on, let's get to it. See if we get to 175,000
Oh, I haven't
subscribers.
watched it.
Mostly voted F. Tourist, well done.
I don't have any. I haven't sent you guys anything, but I did do a soft launch on Instagram
Oh,
Oh.
for
And?
Your friend
Mandy
your friend Dakota
Markets
yet?
for my socials.
Okay.
Yes, Dakota. I friended Dakota on my personal, but I just did it last night. So Mandy in the Markets on Instagram. I'll just be sharing my journey. So of Top Step. So I'm excited for that. Just going live. That's my goal. That's
You
what I'm
have
focusing on
3
right now. Trying to
followers?
get
Oh,
live.
we can do better than that.
Yeah,
All right.
let's get it out there.
Oh no,
Yeah,
I literally just told you I literally soft launched it like last night at midnight.
Okay, well, I just posted your link in chat, so let's see where
Oh,
this
hey,
goes.
thank you. Yes, yes.
Let me get
So
Mandy some followers on a brand new Instagram, Mandy in the Markets. Oh,
yeah.
Forex into
So
options
I'm
into
excited.
futures and crypto. Okay, I didn't know you started in Forex.
Yeah,
pretty cool.
that's where a patient introduced me into day trading. He's a Forex trader and he's still doing it. But yeah, I don't know. It just didn't stick with me. Options, win big, lose big. So during COVID and just grateful to have stumbled upon Top Step through a few different individuals and You guys are the best of the best.
Look at that. Check is in the mail, Mandy. Thank you for that.
Check is.
I'm going to take my hard
Stop
hat and go
it.
back to work out in the field. Mandy, always a pleasure. Thanks, guys. Another day tomorrow,
Hey,
folks.
thanks, Hope.
See you then.
Thank
Have a
you,
good
Hogue.
one.
Keep me posting on Delta, Hogue. It was minus 11,000, something like that. Minus 11,000. I thought we were going to get all-time highs. I thought we were going to make it from all-time highs. Not so fast.
We are Doritoing.
We're very Dorito. But you know what's not Doritoing is your follower count. You are now up to 84 followers. Congratulations. Can we get Mandy
Hey,
up to
thank you guys.
100
I appreciate
by
it.
the end of the segment? Link is in
Well,
chat. Get her up to
absolutely.
100
And
followers.
you
Go.
guys, I'm not looking for anything in this. I just want to support people as people have supported me. So it's just sharing my journey, showing you it can be done. I've seen people do things. I'm like, if they can do it, like what's stopping me from being able to do it? Put in the work.
Oh, you've
I love
broken
what
out.
Hope was
You're
saying
above
earlier
100
today.
now. Bull
Oh,
market on
thank
your
you.
follower count. This is awesome. Refreshing in real
Yes,
time.
always a bull market there.
Let's
But
go.
I really
Bull
appreciated what
market's
Hoke had to say earlier today. He doesn't like using the word FAIL. He changed that quote today to say fall. And I really like what Dakota's been doing about trying to be transparent. I want to be more transparent. I feel like that's going to help me be more accountable. I have done some pretty not fantastic habits at the start of my Top Step journey. I've been there, and so I can resonate with traders that way. But we are going to fall, and that's part of the process is how do we take that fall and use that for change and improvement and growth and development. And so that's why I've created Mandy in the Market, so I can just I feel like I'm going to do better because I have other people kind of watching accountability. And then I'm hopefully going to help support other people and help them, be like, hey, you're not the only one who's had a bad day, but hey, let's get back to it. Let's follow our rules. Let's set this. So reach out, DM me if you have questions. I am a mom of 4, but when I have time, I will definitely try to respond to those and give you some insights and support and whatnot. So yeah, you
Love
guys are
it.
awesome.
Good vibes. I love it, Mandy.
Great
Salt Lake City
vibes.
Sniper in the house. Go give her a follower on the IG.
162 and counting.
Gold continued to grind lower now. New lows, gold, 33.20. Probability of a pause now up to 56% for September. Yeah, and it was 61% for a 25 basis point cut. It's now leaning a little bit towards a pause. Powell putting the brakes on a rake. I think they're cutting rates. All right, take a look at the ES. They're cutting. He's cutting rates. 63.71. 63.71 last trade in ES. Got the NASDAQ 23,000. Call it 400. Above the low, man, he had 450s. I bet we get close
I don't
to
know.
that.
We're hanging around 4s. MOC
Yeah.
still has to happen.
Ooh, yes,
We might be wiggling below this Dorito. If we can hold below 90s, I think I will be taking a short, maybe 85, maybe 85s. We'll see here. Okay, sorry, I lied. If we can hold below 80s, I'm taking a short. And I will be out before MOC. I don't know if I want to be in anything, especially where I'm up already 400 on this this XFA.
How do you get in, Mandy? Do you have a sell stop in there, or you just go to market?
I'm on market. Yeah.
Market in, market out. Hell yeah. That's how you, I love it.
Sniper action. I don't have time to go set stuff up. You kidding me?
Yeah. All right, Dolby, looking for a push here.
Close. Let's get those 1%. Pop this Dorito to the downside.
Yeah.
And oh crap. What cross is that? The green yellow's popping on top. So my EMA moving average is indicating a short. I want it to hold below. I feel like my candle's got to close.
Seeing.
So that's my rule set.
Okay.
And the cross is off now. So not valid yet.
Shout out to Benji Bushes in the chat. Just past combine,
Yeah.
taking this week off and seeing what market decides next week. So hyped to almost be a part of the fun club. Yeah, you're part of the Top Step fam. Shout out to Benji. Great job.
Good week to take
My
off.
MA and EMA is set at 10. Someone was asking about that. And then I also just like to use as price point targets my moving averages as 14, 21, and 35 and a simple. So I pulled that down so you guys can utilize it for those that want it. Yeah, we're still in that Dorito. I'm glad I didn't take that short. Again, it didn't follow my rules. The cross didn't hold. We didn't close below. We didn't have the candle close below the 80s. So for that reason, I didn't enter, and that was a smart move.
Nice.
And we saw
Dodge
copper.
potential losing trade at the top of the
Yeah.
Dorito now. Do we Dorito back down to 400s or do we break back out?
Question.
Again, copper. We
me, it
saw
wouldn't
copper
be
go
valid.
limit down. We saw copper go limit down right
That
at
was
1 p.m.
insane.
Central.
What happened there,
on
Dre? What happened with the copper thing? I missed that one.
Universal tariffs, 50% tariff on all copper imports. All copper imports, 50%. But we went limit down. I'm going to do some more digging on that. Why did we go limit down? Why did we go limit down on a tariff? 50%. I don't understand that one. Like, I can already see my boss, my mentor, saying more sellers than buyers. Yeah, but we'll find that. I'll do some digging. But yeah, copper went limit down on the president signing executive order. Universal tariffs, 50% on all copper imports.
Well, this Dorito is incredible. It's being very well behaved.
It is. I mean, Dolby, I have you to thank for teaching me that. I mean, if
Dorito
you guys
pattern.
aren't even on the combine, or like if you're not even in a combine, which I feel like is a good like learning experience minimally, just watching Top Step. I mean, I have it. I have the fortunate opportunity to be able to listen to Top Step a good portion of the day, while I'm running errands, getting kids ready. I just have my AirPod in, partially listening while still tending on my way to work because I work like 2 days a week. So as a dental hygienist, so just absorb everything they have to share. Dorito patterns, slow markets. If you can't do it during the day, slow markets is an excellent time.
Great show.
They talk about just basic technical analysis. It's fantastic. Dakota does a great job on that, and then brings in a couple other individuals to show varieties in trading. So just Top Step is a free, awesome resource that if you're not just absorbing it, like you are missing out. So that's,
Mandy.
I feel like also why that has helped me a lot too. I've just kind of been listening nonstop over the last year, little more than a year. I think I got with you guys in May of last year, so it's been good.
Tell Mandy. Love it. I see
I
some
am married.
reason. He's married. Oh yes, they're asking. Yes.
I'm married. I'm just trying to figure out how because I think I'm not too far from Dakota. We're both in Utah, so I'd love to get him set up on something, but
Like a date with something, or what are you talking about? Set up on what?
we joked the other night on slow markets. There's fireworks going on in the state for a holiday, and so I was
right.
like, you need to go out and take a girl out, go watch the fireworks.
Yeah, there we go.
Yeah.
All right.
Maybe we'll be Dakota's wing woman. Dorito's still holding.
Yeah.
I saw some of the reasons as to why copper went down. Got it, but limit down. Limit
They're
down.
saying that copper
none of
was
those-
exempt from the tariff.
The headline
last
said
minute.
copper. The headline said copper. I was limit down. Still limit down. Also, not demand. I was thinking demand. Commodities are supply side. That's supply side. Oil supply side driven markets. Copper supply. Demand's going to stay pretty much the same. Doesn't really move unless the prices get really out of whack. But commodities are mostly supply side. There you go. You learned something today. All right. With that being said, hashtag Power Hour. Upper left hand corner of the screen. Ask you in fast markets to hit us up at Top Step TV on the X. This is where. All right, we're gonna put Andrea. Well, there's these
Right.
irrigation. Give us the
We
ranking.
kind of got another heater. I mean, it was kind of hard for it to not happen after what went on in fast markets today. So,
right.
Here we go first. Got MP.
Oh yes.
This is the screenshot of the combine counter.
Yes.
So he said, should we all be quoting number of counts busted out of like a combine counter, an amount to get back to payout, to get to live, to get to 100K and take home, more transparency, hold each other accountable, affiliates, influencers, and anyone who posts success. Let's ask them, what's your combine counter? So there we go. And then
a lot of
from
top step
there-
copycats out there. Will they copycat this one? Just say, will they copycat this one?
We'll
see.
find out.
Stay tuned to find out. Yeah, go ahead.
We got a couple responses from folks. Dan Emons had no mercy, said start everyone over at 0 today. Let's see, and then we got
okay.
Top Step becoming a Furu's nightmare.
Love it.
And then
What's
we got
Furu?
Alex
I'm
saying-
sorry, I'm old. What's Furu?
So
I'm sorry.
listen. I also had to ask financial guru. It's a Furu. And then
Financial
next
guru?
we have
No, the financial guru? Is that
Yes.
true?
Yeah, Furu.
Yes. And I'm pretty sure my combine
see what
counter is
Alex
closer
did there.
to 69,420. See what you did there. And then next we
Fake guru.
have
You're saying fake guru. Sorry. Ooh, look at that.
fake
One. Sorry, go ahead.
guru. Oh. Okay. Well, anyway, we got breakfast and fast markets with Top Step TV from Alex. Also, FOMC today. Buckle up. Is he having pasta for breakfast?
Breakfast?
Listen.
Hey,
I agree.
One judge. There's a power
Pizza?
bar or something over there.
They'll give me a
too, right?
pizza for breakfast.
Yeah, why not pasta? All right, then we got G Nose Trading says first combine is a fact. So there we go. Keep us
Ooh, let's
posted
go.
how you do. And then we got some little submissions from our internal creative department.
Oh boy.
Andre, apparently you've been rebranded as
I want it that way. Is that them? Is that Backstreet Boys? I might mess that
no.
up.
Wait.
I'm long.
Oh, we broke out.
Oh, okay.
All right, that is definitely.
Sorry.
Way to get out there. Is that Backstreet Boys or NSYNC? I don't know. All right, we're catching a bid here. 23,000.
Yeah, it's Backstreet. It's definitely Backstreet.
The other boy band of my childhood. I was confused. 63.79 last trade in the
we're
ES.
in.
We have. What do we got here? We
What's your
got
stop at, Mandy?
I need to adjust that. I need to have it tight. I can't lose 7.
Long 2 micros, Mandy. Where's the stop at?
I don't know.
Mandy.
400s.
400. Perfect.
400.
All right.
400s. All right, sounds good.
I feel like I got to bid back into it. Oh, no.
Uh-oh. Hold on.
It's a fake Dorito
Into
breakout.
it.
Furu, huh?
I know. Did I not draw it the best?
Why can't we just say fake
Do I
guru?
need to adjust my Dorito?
Hey, 45 seconds MOC. 45 seconds MOC.
Oh,
Oh, hell yeah. We got
45.
MOC. No, we're in great shape, man. MOC is always bullish. It's going to be awesome. What's your upside targets?
I'm not going for 1,000 on my TP. You guys, these are quick ins, quick outs, literally. I'm
Sniper.
going for this top of this
He's a sniper.
right here. 30.
454s?
Buckle up. I got a feeling it's going to be a big one. It's going to be a big one. It's going to go ES, then NASDAQ, then YM.
I don't love this. I don't know if I want to stay in this.
You got 5 seconds, Mandy.
5 seconds.
Here we go. Buckle up.
Yeah, there we
Okay,
go.
we're in.
Okay, we're good.
I'm out.
Not a whole lot. 800 mil buy side NASDAQ. Everything else is pretty much nothing right now. It's 300
There
mil
we
sell
go.
side.
I
Yeah.
dipped out.
Stay in there, man.
I want a green day.
We're
I
still in.
want to keep. Yeah, you go. I
We're
probably
out
should
one.
have switched to
Nice, sweet.
micros on that.
I got you on those numbers.
If I was in micros, that would have been better.
What's an upside target here, Mandy? We're long 1 MNQ, 23,425.
72s?
What's
73. 73 is a good target. Actually, VWAP. Let's take that back. 85s.
85s? 85s it is. We'll put this last one at 85s.
I mean, we are looking really good right
That's
now
great.
at my above and below.
Oh. Time highs, Jay. Psycho. This is a good one. Good trade. Nice little momentum play. So what was the idea? That we broke out of the Dorito and like a little consolidation and it became support and then rally?
Yeah.
Is that the plan?
Absolutely.
It's a great plan. Great plan. Up 20
I mean,
points.
we have
Roll.
this 35-day moving average at 70s. So I could see that being take off one, and then if you have enough, take another one off at 45s.
45. We're at one already, so we got one run in. We're going for your 85s, I think. Here, we'll do it.
Nasdaq still buy side, 850 mil buy side right now. With very little change since the initial announcement. Again, 55 till 55 till 55 after. See another injection of liquidity, but right now we got some buyers stepping in here in ES, buyers stepping in the Nasdaq, buyers stepping in the crude as well.
George is right. All roads lead back to VWAP.
That's right.
Always. VWAP,
You have
George.
that for the book, right, Dre?
95 pages. Would you like to add anything, Mandy?
Yeah, George.
What do you got? Oh, that's
Quote
in there.
George on that. All
It's
roads
in there.
lead back to VWAP.
It's like
Yeah,
page
it's
2 or
all-
3. It has to be in
it's
there,
in there.
yeah. Classic.
Santa Claus rally. That was a new addition. That was last night.
That is a good one.
Yeah. Also, don't forget earnings. Meta, Microsoft, Robinhood. What else am I missing? I know we got more than that. We got way more than just that. Those are the three I got. Then we got
Microsoft,
Apple.
eBay, Meta, Qualcomm.
Yes.
Volcom. Wow.
Qualcomm.
And then we have. Is that way? Okay, clarified on the upcoming 50% tariff. Reply only to semi-finished copper goods. Okay, but that's not good enough for limit down. I don't know. That's limit down on that.
Well, I think
limit down 10% on that.
Well, what if everyone, Dre, was anticipating copper tariffs, and then Trump rug pulls? It's like, hey, just kidding, no copper tariffs.
Yes.
Copper tariffs were priced in. So does that mean it's going to sell off and get back to balance? Oh, we're flat, by the way.
Perhaps, but limit down.
87.50.
Limit down aggressive.
Maybe people were thinking he was really going to commit to it, and so they just got a little one-sided on that trade.
Oh yeah, did they ever? All right, 23,438.
Yep, we're out.
At a minute 20 until 5 minutes.
Liquidity.
Till the party. One needs to
Still like in the above
learn
and
booking
below.
losses like a professional before you get rid of We're going down as bearish for the economy. I get all of them. Yeah. Get it. But limit down? I get why it's down. Well, I still don't get why it's down. Anyways, whatever. Stay locked in here because we are closing in on VWAP here. Let's see what happens in about 45 seconds. 45 seconds.
Yep.
Copper
We're out of this.
There we go.
We got out of this trade a while ago.
All right, so there's that target, that first target that I talked about.
Nice.
We hit the 35 moving average. Right here, my pink line. I should throw in a periwinkle in here for you, Dolby. An ode to Dolby.
Oh, yeah.
Oh, maybe I changed my Dorito lines to periwinkle.
Periwinkle? Oh, that would work. I don't know what flavor that would be.
Jay keeps calling for all-time highs. Jay, we got some work to do.
Perfect.
All-time highs.
That's
He keeps calling for it. Let's see if we can win all-time highs, win air horn. 5 seconds. See what happens here.
Ooh,
anything there?
good thing we're out. Maybe selling.
A nice little series of stair steps.
Oh, it flipped sell side. Shoot, flip sell side. 1.6 bill sell side ES. 400 mil sell side Nasdaq. 400 mil sell side Dow. Are we seeing selling in the markets? Okay.
Look at this. Apparently, South Korea has an offer to buy down their 25% tariff.
What?
Whoa.
You can buy it down?
That's a negotiation.
See, Trump, Pakistan and the United States will work together on developing their massive oil reserves. We're in the process of choosing an oil company that will lead this partnership. And then, about 2 minutes ago, South Korea has an offer to buy down their 25% tariff. Wow. Okay. I'll say it, Dre.
I love it.
You can buy it down. You can.
I don't know.
Give us a bunch of cash, and we'll have a lower tariff. Lower tariff rate.
We're all in this together, Dolby. Mandy, we're all in this together. All right, we got some buying coming in. Buying up here in the ES. What was that? We'll see. Okay, it's growing sell side. How about this? Growing sell side. ES closing in on 2 billion sell side. In the ES minus 400 million sell side. NASDAQ 500 mil sell side. With 3.5 minutes to go. Are we in
Go to the Treasury. The company buys.
You buy
I gotta look this up, Dre.
I mean, I know how you do it.
Where's it go? Where does the money go?
What do you mean? You can Venmo I think you can Venmo.
Venmo Trump?
No, you can Venmo. You can Venmo the Treasury to help pay down the debt. Saw that. That was pretty sweet.
Dolby, is this
Heather.
Periwinkle?
My
Dorito?
Switch to your screen. Oh, it's pretty
If you're
good.
still long, I'd get out
Swatch.
at VWAP. I like VWAP.
We're already flat. We were flat like 4 minutes
Sell
ago.
side growing. What a day. What an absolute day. Last trade, 23,464. 63.93 in the S&Ps. Someone asked the question in the chat, why with this heavy sell side? Why is it we going higher? Tells me more buyers and sellers than my boss would be smart ass and tell me. This is sometimes they're head scratchers. Here we go. All roads, Mandy. All roads lead to
VWAP.
Yep.
VWAP.
23,484 is that overnight view up in the NASDAQ. ES has about 6 points to go to get there. Yep. Don't forget major earnings coming out. Major tech earnings. Meta, Microsoft, Robinhood. You forget another one. eBay, Ford. We got more tomorrow. We're not done. We got the inflation numbers coming out tomorrow. We got Apple, Amazon after the bell. Then we got non-farm on Friday. You know we're going to bring it to you. Let's see if we can hit that. What do we got something down here? Yeah, Mandy, above below. 23,450. 25 points higher right now.
Mm-hmm.
My
Andy,
initial above and below was here at 70, but then I retraced it back to 50, and I'm still thinking that could happen.
You were going back to 50?
I think we could.
Not just exactly back to the middle of the range that we established.
Exactly. I mean, it's
very
fitting.
504 is the middle of our
likes
entire
it.
range today.
Tony, nice call. Short squeeze indeed. Delta has pared back just a bit, about half. It was minus 11,000-ish. Now it's around minus 6,000, 5,000 or so. Nice catch, Tony. All right, Andy, best of luck on the race and the training. Cool 16 miles on the treadmill. I don't know how you do it, but that is the discipline determination. Absolutely very cool. Love having you here.
What, running on a treadmill for 16 miles?
Humid here in Ohio. I'm in Columbus. Very humid right now. So the treadmill was the only way that I would be able to execute it without literally dying on the side
Do
of
you
the
just
road.
zone out? When you go treadmill, do you just like zone out? It's like go robot mode?
On
Like how?
the treadmill, usually just like crank something loud. I actually, my
Insane.
kids are into the K-pop Demon Hunters. Oh, 20
Yeah.
seconds here.
Yeah,
Dude,
20
that soundtrack
seconds.
is unreal.
Oh, shit, that play. Oh, can we
Off
find it on your
Netflix.
Instagram? Again, go follow Mandy on Instagram. Give us the deets in the chat one more time. We got
10
10
seconds.
seconds. What a day. What a day. Last trade in the NASDAQ, 23,488. Can we get to it? Can we get to it? ES device of buying. Woo! Man, oh man, oh man.
70s,
Mandy, as
70s.
always, go check her out. Go
Same.
follow her in the Instagram. As always, thanks for coming on. What a wild day. Dolby time. Nice trade there at the end.
Thanks, you guys.
Locked in today. Dolby, love it. Need more of that. That being said, we got more, earnings coming out after this. The president is going to look for a microphone anywhere he can. Stay locked in. We're all this together. Shout out to all the bellers making this thing happen. We keep grinding, keep jabbing. That being said, throw it to my main man, James Harden. Take us out of here into At the Buzzer. Let's go.
Absolutely. I've told you guys it's going to be a big week here on Tops of TV. I wasn't lying, and we're only halfway through. Stick with us, because right after this, we have At the Buzzer with Coach Jay and Coach Paul. Later tonight, Slow Markets with Coach Dakota at 7:30 p.m. Central. Tomorrow morning at 1:30 a.m., London Open. Aaron Luce is back. And of course, Deanna with the Euro Trade at 3:30 a.m. Central Time. And then we'll be back here 7:15 a.m. tomorrow morning for another day of Top Step TV. 7 teams have been drafted. We got 4 to go. You got to be here to find out if you made it live. Thank you for watching. Thank you to our bellers. And thank you to the chat for showing up every day. We love you guys. Stick around for At the Buzzer, get some rest, and we'll see you tomorrow. I'm James Harden. You're the chat. This has been Top Step TV. Let's go.
Why Top Step? Because traders shouldn't have to risk everything to participate in the markets. And since 2012, we've provided capital to over 10,000 futures traders just like you. From the pits in Chicago to screens in over 143 countries, we've been motivated by one simple idea. We don't care who you are or where you learn to trade. If you pass Top Step's trading evaluation, you'll be invited to trade with our capital in a fully funded account. As a Top Step funded trader, you keep 90% of profits and we take the losses. We also offer educational resources for all levels, live classes, and free group coaching from a team with over a century of professional trading experience. We're invested in your success. So what are you waiting for? Ditch the brokerage account, start learning by doing, and become a Top Step funded trader today.